straddle?
If you wanted to straddle, which is basically the 440 is the nearest.
Not OCD, regular March.
Yep,
right?
regular March.
Yep.
440.
Yep.
13.5 cents.
Yes.
That's 3 cents in the money. And 10 cents, which is 3 cents out of
So
the money.
23.5 cents.
23.5 cents to straddle.
So they don't expect this to move. The implied volatility is expecting not more than 23.5 cents in
the next 66 days.
Yeah, 66 days. Okay, we'll talk about that.
Welcome to Hedge Heads, where hosts Jon Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, you are working on having your own commodity saying, and I like to give you a hard time about saying protect the downside and leave the upside open. You say that frequently, but look where we're at right now.
Yes, these are unattractive prices, and there's starting to be a little bit of panic that the rally that we would normally see in the winter might not come. There's a lot of bad news on the bean side, and that's really been a drag on everything else. You look at the wheat news, that's been great. The wheat is not reacting, but the Russia just made another big cut to their crop. And then corn had good news with the report. So, I mean, that's enough, or should be enough, for it to rally this time of year. It looks like farmers unloaded a lot of physical corn on that rally. And basis collapsed in a lot of regions. I talked to a lot of different guys in a lot of different states, and it sounds like it was pretty widespread. So a lot of it moved, which is good. That's what you need for a healthy market. Holding it, storing it, and trying to make them pay up in the end, that generally doesn't work. So it's nice to see some grains moving on good demand, but then we go to soybeans, and that's just this huge anchor. Soy oil actually is not bearish at all. It had more good news yesterday. I think we're 10-year lows for ending stocks. They had released the crush report. It was a little less than they thought, but soybean oil stocks were less, which makes sense. If they're not crushing as many beans, then you would have less oil, is generally the way it works. But if it's less demand also, you'd have less oil. But oil is definitely not stacking up. It's selling really well, but the markets aren't responding. Just got punched right in the face today. I think it was down 4%, making new lows. Beans were making new lows, multi-monthly lows. I mean, nothing looks good. So the corn's in an interesting spot. What you led with is, what do you do with this market? Now, beans sinking, and we're going into a lot of politics, possible trade wars, tons of volatility most likely with these markets. And when I say volatility, if there's a lot, it's most likely going to be the downside, unfortunately. Although you could get banned on used cooking oil out of China, that would obviously really support soy oil, which is already bullish market. Doesn't like it when I buy it, though. Of course, it goes down. Today seemed like a great dip to buy, and it was the dip that just kept on dipping.
Kept dipping.
Yeah, eventually it bottomed out there, but it was kind of an ugly day. So back to corn. What do you do with this market? So 440, even though it's 437 3/4 or something like that, we'll call it 440 for easy math, which I need. And it's a price that is not quite there for many people, especially with the inputs going up. And so it's really hard to just run out there and grab that. Last year offered much more attractive levels. I think we're in the fives probably this time last year, and in December 25 I'm talking. And then for December 24 corn, I think we're in the 470s maybe. So these were better prices this time last year, but not great either. There was carry in the market, a lot of carry in the market last year. So the new crop had a lot better price than even the front had. That's not the case this year. The front's leading and the back end is very weak, which is exceedingly rare that we're seeing what we're seeing. You basically have a declining market with the front leading still on the way down because of the good demand, but the perception's so poor on where we're headed to that the back end can't come up. And it's been that way since August. So December 25 has got a big anchor around it. It just assumes all these acres next year. So what do you do with that kind of market that actually could go higher, a lot higher, because the buffer for any weather around the world and the U.S. weather next year, it's really hard to take out that upside and just lock in 440. That's the first instincts of many, many guys. Run out there and just lock that in. And I just don't. I'm just not in that. I don't like that way to market. One, because it's really not profitable or not profitable. But number two, you're giving yourself no chance through a lot of news that we have no idea what they're going to say. It actually could be a lot better than what we think today. What if the January report's really supportive for corn? They make further cuts, and December 25's drag kicking and screaming up, and it's 460. That's 20 cents. I mean, that's not everything, but that might be your profitability. So to take out the upside, that's the guys that aren't familiar with how to market or how to hedge. That's their first instinct. They know nothing else. I'm going to do a hedge to arrive, or I'm going to lock this in, and they just don't consider anything else. So what ideas could you come up with? I have a couple. Do you have any ideas? I have like two.
Before I have an idea, which I might steal your idea because we chatted about them earlier, and then I'll just take all yours and you can come up with new ones. But what changed? 1 week ago, we were discussing the report, how surprising the report was. You were nearing bullishness last week, John. The report was very supportive corn.
I made a bet that it doesn't look like I'm going to win.
I am excited to get a free beer out of this bet. Or lunch or whatever we decide.
We'll have to check the tape. I don't remember what the bet was even.
We'll have to roll that tape back. Maybe I'll clip it into this one on the outro, so listen to the end, or just click skip till you get to the end. I'll find it. But what changed? I mean, what corn has not looked good since last Tuesday. I mean, it hasn't been horrible, but it certainly hasn't been going up.
No, it got good news and then it went down. And that's not super uncommon. It's not impossible that it would do that after a report.
What do they say? Oh, we have a saying, commodity saying.
What's that?
Is it, what do you buy the rumor, sell the news?
Buy the rumor, sell the fact. I meant that, yeah, that's what happened there. I guess it was already in the market plenty. But if you notice the 3 days after it, they bear spread. And I talked a lot about spreads. March was the leader on the way down. That had everything to do with very heavy farmer sales. And then you would see that in basis. So when I talk about basis and spreads, they're very close cousins. It collapsed in the front, like 2 or 3, when I say collapse, 2 or 3 cents carry, but that's the most carry that we've seen go in the market for months. So heavy farmer sales coupled with absolutely no more good news that they didn't already somehow know. 1.7 was shocking to a lot of people, but the funds didn't seem very impressed by it, and they're very long. So it's kind of this weird market where any day it could go up, but the more days that pass, the harder it's going to be as we get closer to that South American harvest. I think we have 4 weeks where we could still do something in corn for sure. But unless beans wake up, soybean oil, something, wheat, it's going to be hard for corn to do that by itself. When's the last time you've seen corn by itself lead all the other grains higher? I don't think I've ever seen it.
Yeah, it is interesting because it's usually following one or the other.
Yeah.
Either wheat or soybeans. And even, like I think back, Ukraine war was more driven by wheat.
Yeah.
It went up. The soybeans weren't as affected by that. They did follow. But
Yeah.
that was led by wheat. Corn had a huge rally in that. What else? Trade war. Again, corn held up longer than anything else. But
corn's usually a follower this time of year, especially in generally soybeans are bullish and it's going to get tight and they go up into spring and then corn follows. Sometimes corn will gain on wheat this time of year, and then later on wheat kind of takes control. That's actually a spread that I am monitoring, is the corn wheat spread. There's a lot of different months, and the months that you choose will matter a lot if you are tracking that spread. Because the wheat conditions in Russia were so poor that I think eventually that's going to create an opportunity. The world balance sheet's somewhat tight for wheat. So I am tracking the wheat corn spread. Definitely not put it on, definitely not a recommendation. At some point, I will look at that if corn is able to lead somehow and wheat stays really quiet. But then you got to pick the right months there. So that is not a spread for the faint of heart. That one definitely moves, and you're gonna know that you have it on. You're not gonna forget about that one in your account.
And how you might get a few phone calls about that one.
Oh, is there anything better than just having some spread on or some trade and you just forget and it's just been working every day for you? Then you're like, oh yeah, I had that. It's not that I have so much on, but sometimes you get 8 or 9 different spreads on and you can forget that you have stuff going on. There's been plenty of times where I've missed a trade totally and thought I've had it on, talking to guys and we're going to do this. They buy. Of course, the customer has to buy first before the broker can. You can't front run. And so then I get another call and then I'll forget to buy it and I'm ready to cash out my long wheat or whatever it was. And then, of course, there's nothing in my account. That's happened at least 100 times today.
I have done it that way. I've never forgotten about one that actually worked unless it was an option. Some of those long-term options, sometimes those just sit there and then all of a sudden one day they work.
Although I tell you what, I made a great mistake today. I was going to buy soybean oil right away in the morning, January, and I did. It opened, it was weaker. I'm like, this is a great dip to buy. Bought it, and then it went into a free fall. I mean, then the selling really started. And
they
I was
were
thinking,
waiting.
oh,
they
boy.
said, John, there's John. He just bought it. Let's dump this.
Yeah, I'm like, I'm gonna step out and wait till it's done going down, and then I'll get back in. Look at my account, and I'm up $62. So I had bought a January bean, which is nice, and that was going up at the time, I guess. So I didn't have a loss until I rebought it shortly after that, and then I got the loss. So we'll carry that in the night and see how that goes, but. So mistakes can be good. That today at least saved me some money, but it's really, really difficult for corn just to pull everything up by itself, which has me very interested in corn spreads. Definitely call or text me or just up me, and I'll tell you exactly which ones I am looking to get into right now. A few guys have gotten in. But because of the situation corn is in after that report, that's something that I am looking at. But back to corn. So what can you do? Here's one idea, and
you're not going to let me steal your ideas.
Oh
first.
yeah, yep. Shoot, I don't think you have this one, but
right.
You might be.
I mean, the one that I am watching that we talked about is kind of a short-dated option, not a technically short-dated option, and that is the straddle.
You are stealing it.
I'm stealing your straddle on March?
No.
You're not trading March. Only I'm trading March.
Yeah,
I know you're not trading March. You're looking out in December.
We're talking that straddle. I knew you'd be all over that thing.
I'm watching that March straddle. 23.5 cents.
Yep.
23.5 cents right now on a straddle is not... That's crazy. There's 66 days with a whole new government coming in.
You sure you got your straddles and strangles correct?
Yes.
We'll go over that. Go over that.
Okay, so straddle is if I'm buying a straddle, you can sell it. I wouldn't sell this one.
Yes.
Not a recommendation to do either side. But I'm looking at buying the 440 straddle on March corn for 23.5 cents. There's a whole lot of stuff going on that could drive corn either way. And so that's buying the call and the put at 440. That's a straddle. You could strangle it. You could buy the 450 call and the 430 put. It's probably considerably cheaper than 23.5 cents.
Yeah, you're essentially buying volatility.
Yeah.
Some of my favorite trades are these beans through reports. That I love this. I also love that you can't be wrong for sure, especially at the beginning, because it's going to move one of those two directions. It's just got to move fast enough. For you to make money.
That is the problem with corn.
Yeah, and that is. So
corn does not move fast.
23.5 cents is what that's the implied volatility saying it's not going to move more than that amount all the way through the third week in February, that's saying a lot because we've got some news. You have the Russian weather, and then you also have all the politics that are going to come with Trump's inauguration. So you have all that, and the market's still saying we're barely going to move.
Yeah.
And that's been the problem with option strategies this year, is that unless you're an option, well, buying and selling really hasn't worked. If you sold calls and it goes into a declining market, it has worked. Or if you sell strangles, it's most likely worked. It hasn't been in a big range. So those guys have been winning that have been selling what you want to buy.
I mean, we can talk selling calls and how poor that is, though, right now. You just, before we started, looked up a call.
Yeah.
So I'll let you give your strategy now since I didn't steal yours.
So what I was going to look at is okay, so they have what they call short dated, which is the world's worst name. Everybody just assumes that's a really short date, and that's not the case. The symbol is OCD, and what this is the December 25 corn, new crop corn, in different time periods. So instead of having to buy a December 25 put with all that time, they're very expensive. You can choose different time periods. So I was looking at July, even though seasonally it doesn't work at all. Generally, you'll find your high right about the time that expires, except for in the drought of 2012. I don't know if I've ever told you the story other than 100 times. Unless you buy calls in the year that we actually have a drought, then they will expire on the low that year. And don't ask me how I know that. But that's the third week in June, which I'll never forget. So calls can go down, or the futures can go down even in bullish years in that time period. But what I like about it is, it's 20 cents. So all of a sudden your floor is 420. But what you get for that, instead of marketing 440, you get to see what happens in between now and the third week in June, which is a very long time period. A lot of guys don't like this strategy because you got to come up with 20 cents. So it's with all that time, it's not going to go to zero overnight. You're most likely, let's just say you buy it and a lot of stuff happens, and in 2-3 months from now, it's 450. That 420 is probably going to be worth, I don't know, you can't know for sure, but I'd say 11 cents. So what you've given up is 9 cents for all that time to see what's happened. And you get if you hold it to the end, you get to see the first half you get to see all the planting in the first half of the growing season. So that's the benefit, but the downside is that you give up 20 cents. So I was going to look at buying that, and then along the way you could be selling, because they do it in every time frame. You could do February, March, April, short dated I'm talking. I looked up the March short dated 450 call. You know how much that was selling for?
I do, so I'm not going to answer.
Yeah, 4 3/4. I mean, that's horrible.
That's horrible.
Yeah, no, that they don't think it's going to move. The implied volatility does not think it's going to be trading. Well, do the math there. It's giving you 4 3/4 plus 450, so it's got to go to 455 essentially. They don't think they're daring you.
That's 18 cents, right?
Yeah. They don't think it's going to move that much.
In 65 days.
Or at least up to 455, where it would be your break even. That's a really bad attitude for a market to have. But we also looked at puts, and you just talked about your straddle in March, which I would say is a much more volatile time period than the short dated, the December 25. And they just don't want, both sides are very, very cheap. So one side's going to win here. I mean, there's going to be a great deal on options, and there's just no way to know which way that's going to be.
Well, and that to me is interesting. Even you were talking the short dated, right? So you're talking 18 cents.
It's the worst name. It's so hard to navigate all this talk because we'll slip to the actual March contract in the March timeframe, and then we'll talk about the March timeframe off the December 25. If they would just have named it something else, this would be so much easier.
But it is absolutely necessary for hedging to have that option. It's a huge advantage for hedging to have the option to buy an option in March on the December 25 contract.
Yep,
you're right. They just need a different name.
Yeah, it's a wonderful thing. There's a lot of years where it's just totally useless, and then there's going to be a lot of years. Like last year, it was pretty bearish, and you could the front was leading the way down, so you're better off in the front. Yeah. But if you're just a pure hedger, you want to match up your crop year with your options. And to go all the way up by all that time with December 25 is really expensive. So this is their way of being able to help hedgers afford different time windows, if that makes sense to you. So it's a wonderful tool in a year like this. And it's also good when you have July soybeans $1.50 above November, and they're two completely different markets when beans get tight.
Yeah.
It's also very good in soybeans. So you don't often need it in corn, but this year it looks like at least an idea. If you're worried about downside from here with all that's going to come here with the South American weather and the politics, there is something that you can do. Am I doing it? No, but it's at least an idea that you can kick around. What if we come up 15 cents really quick, and then we're looking at 430s for 18 cents, or something like that? Then it starts to make a little more sense. But these numbers are all just bad, and that's the problem.
Right. I have two notes. One, if you are looking at soybeans, that is OSD for the short dated.
That makes sense.
Soybean, yeah, OSD for soybean. But I mean, realistically, if you're bullish corn, so you can do the December corn for 4 3/4 cents, like 20 cents, he puts you in the money. If you think corn's going to move 20 cents in the next 65 days, it only costs you 4.5 cents to buy that call.
Yeah. Yeah. And
I mean, there's definitely options out there.
There's a lot of politics that are going to happen, and everybody assumes the worst. It might be way better than you think it's going to be.
Well, I can think we had that report. Let's say we adjust the January report. Let's say Mexico buys more. Let's say there's not a trade war.
Yeah, let's say there's a trade
South America
deal.
Gets, some heat and no rain.
Yep. And that's why you hedge, because you don't know what's going to happen. Instead of giving up, so you're giving up any upside that we're going to have, and you're going to take 437 3/4 in return. And lots can change in between now and the time period I use. It would be the third week in June, but I meant you could buy further time periods. So I am an optimist. I think things are going to change. I think things are going to happen that we couldn't possibly predict. So I'm in the camp, and you make fun of it all the time, but that you want to, at all times that you can, that it makes any financial sense to leave that upside open, especially at a time like a year like this, when it's known for going higher into spring and then possibly a lot of summer volatility. But it's got the very real chance to keep on leaking lower too. So that we're not buying it for fun. If we were to buy it, it would be that there's a real reason why you're buying it this year. And that's because you hear everybody, it doesn't help every day. Everybody peppers everybody with, I think they're going to plant 96 million acres of corn next year. So that's not going to help that contract when that's what everybody says every day. Now, what's realistic? I don't know. I'm at 94 at this price against.
Realistically, if the prices are where they're at, why would somebody plant soybeans?
Cheaper.
Sure.
When things get tight, historically it can switch to beans, but we of course don't know the financial situations of everybody. You can never figure that out, and of course weather will have play a part of what acreage is going to go in. But the expense is maybe going to start to affect acres this year. But if you can, sell 440 corn, sell a call against it, you start building a better price. I'm talking about guys that are good at hedging, or they know what they're doing in those markets. You might be able to build a 460 price out of it without a ton of risk, and then plant a lot of that. So the guys have a lot of time that are familiar with hedging to build a better price on December 25 corn out 440, if that's what the price they were taking today. But it also carries a lot of risk. We just went over that. All these little picking up pennies in front of a steamroller could really get you when you start selling these really cheap options. It sometimes doesn't make sense. So if I was running a farm, I would probably look at getting something under it with a new short dated thing going into at least the inauguration into February, and see what he does by mid-February, just to see what's going to happen. But I don't run a farm, but I would like that comfort that at least I know my worst case scenario right now. I also feel like this is a really low price for this time of year, and that something's going to change, and that's pretty much everybody's attitude. The only thing is they don't do anything, and that's a good attitude sometimes of the year. But they tend to have this attitude also in June, which is a terrible time to have that attitude. Like, oh, it's
Right.
550. Let's see what else she can do. So this is a time of year that why I would want to keep the upside open, and it makes a lot of sense. So that's kind of where I'm at on corn, but there really is no good answers.
No, I think you can put a floor under it, and the reason I make fun of you a little bit for leaving the upside open, hedge it outside, leave the upside open. It sounds too good to be true, and there's definitely reasons why. I mean, you're giving up some to be able to do that, and that's the only thing.
That's a hedge.
That's a hedge, and so we aren't talking from a speculation side. Like you wouldn't. You're not going to use those short dated options because you think corn's going to go up, right? I mean, rarely those kind of things.
Yeah, you're not cheering for the
those
market
things.
that you're producing to go down.
Right?
Yeah,
So-
this would just be to protect the price because they think there's going to be large acres next year and beans go down every day, and that all the acres are going to switch to that. But still, I don't like the time of year we would be doing this. It doesn't make a lot of sense, historically.
Yeah.
And then the politics, like I've talked about a few times today, nothing specific, but already look at soybean oil. It goes down every day because they think they're going to cancel everything and all the biodiesel. It's all very ridiculous. It'll be nice to actually get there and see what some of the policies are going to be, and it'll have a clear idea of what to do with your hedge. So far, very little has been done. Nobody's calling and nobody's asking or kicking the tires. And that's really gone on for a little while. This price is just low and everybody's just hoping it goes higher. It's going to be interesting, though, just because of all the stuff that we have to go through in the next 8 weeks in between the South American weather and Trump's policies, whether they are met with, I don't know, like the Mexico one's going to be good for corn. Is it going to be like a really bad deal, or is it going to be something that they're going to work on day one and not really even be a story, or even possibly form a trade deal that would benefit us on the corn side of stuff? So these are all possibilities, and no one knows the answers to. And I look forward to getting to that time window. It seems like it's taking forever.
So we talk corn. I'm going to put you on the spot. Is there anything that you can do with beans right now?
Cry.
Cry.
No, it's
Okay.
that number. The number.
Fill me with confidence.
Yeah, the number they put out is 470. That's not a good number. But the one thing about beans is, it's like a cat. It has 9 lives. It just, when it looks like it's easy and you should short it, it's gonna go down. That's when it'll teach you a lesson about life. I've been on that side before. So never rule beans out, but all the numbers are really ugly except for soybean oil. Soybean meal is low enough price that it could be bottoming. No, there's not a lot of good news there. South American weather continues to be about as good as you could hope for. And that is affecting their prices already there. And it seemingly like this week that they are trading that South American weather finally. And we have a decline, I think, on that better weather.
Well, correct me if I'm wrong, but heading into the new year, the seasonal would say soybeans are heading up. So I would seasonally don't through March through Easter.
Yeah, the seasonals, it hasn't been working for the last couple of years, but
Okay.
yeah, it normally what we would see is good demand all the way through May, because of gravel roads, trucker strikes. Unfortunately, they built up their roads and they built up their ports, so they're shipping it out faster than they ever have, and that's really changing that soybean seasonal. The window for our exports is getting shorter and shorter and shorter every year, until they have a short crop. We lose that window. Our demand has been good, but no better than the USDA's numbers, and really not very good if you look at the last 5 years. So it just doesn't have any story right now. And beans, I think we made new multi-monthly low today. I don't know. I think the chart was ugly. That's what I was reading on Twitter.
I like that Twitter analysis.
Yeah,
I do know they came back off the bottom of about 5 cents before close. I don't know if that held into close because I didn't look.
Actually, the closes didn't look too bad, but these markets are terrible. I watched some Vegas Matt try to think of any ideas. I'm surfing for ideas, and it's there. I hope I'm missing something. Somebody can call me. Any idea you have, call me, and I'll be happy to listen, because I'm thinking of any combination that could help anybody, and it's a really rough stuff.
It's a super tough time of year for sure.
Yep.
That's there's your cheery Christmas report on grains. let's talk cattle and hogs, because man, hogs. I mean, both the last 2 days have been a little red, right, on both cattle and hogs. But
the funds have added. We saw last Friday the Commitment of Traders report, and they have added. So they really like these markets. These markets are different. This is something that's never happened before, and these are going to be different than they've ever been in the past. Or the funds will lose interest in their shiny new toy one day here, and it's going to fall. We got great fundamentals. That doesn't always matter in meats. So for now, the funds are hanging tight. And I think, honestly, that's all you really need to watch in cattle. Obviously, box beef, the sales are on fire. Everybody knows that, but that's perception. Like, hey, this seems like a good idea to pay way too much for this cow in the sale right now, or a calf. And one day, the futures will say that's enough, because it is the futures. It's not today. And that'll erode just the confidence that maybe I shouldn't be paying this for the cattle. Other guys say this thing's just beginning. So you get all this stuff towards tops of markets, extreme fund positions. People saying this one's different. You don't know. We're just beginning. This is the kind of talk you hear at or near tops. So what am I doing? I'm looking for bear spreads, and you got to know the right months. There's certain bear spreads that I'm definitely in, and I'm definitely looking at. That's the way I'm top picking the market. So I'm bear spreading certain cattle contracts, but that can be very dangerous if you don't have the right combinations. And obviously, that's not something that we can really go over right now. But it is something that's how I approach it. Pretty quiet on the hedge side. A lot of kicking the tires. I'm gonna hedge, or I'm thinking about hedging, and not a lot of guys pulling the trigger yet. So full steam ahead. It's fun, still love it. It's got great news, and it's just been going up nearly every day. Got a little shaky yesterday, but I don't trust meats up here, but I wouldn't rule out going up into the regular seasonal window, which would be beginning. I think it's the first week in February. In January, the back half of January tends to be really strong. So it's hard to fight the fundamentals and seasonals and the funds. So I sit there and watch it go up, but I don't buy it for some reason, because I guess I know better, but I'm proven wrong nearly every day.
That's probably why you don't make money in the stock market either, John.
Well, it's funny. I shouldn't tell this story. No, I've had a few people flip the other side. Like I'm talking perma bears, and of course they get it right in front of the 8-day sell off, and they just laugh about it. Mainly this is done in micros. Most of the stuff's on a smaller scale. Some of the guys use the bigger contracts, but the micros are fun, and guys have they're in pretty good spirits about it. But it's kind of hard to watch. If a guy's got a real bearish attitude for years, and then they finally join the long side, and then of course they right in front of an 8-day sell off. But again, it's the micro size contract, so it's not too painful. But that's been pretty weak on the idea that there's going to be a bunch of trade wars with China, and then a bunch of investments pulling out of China right now, which is already weakening a very weak economy, and is spilling over into our economy. And it should. I mean, look at. I wasn't even going to say it, but I have to. Fartcoin, 820 million market cap.
Yeah,
Yeah,
that's
isn't
what you
that
told
bigger
me
than
the other day.
half the U.S. companies? I mean, that's. Is it not just an imaginary coin somebody made up with a horrible name?
I think that's how most of those work.
I think that's how all of them work.
I probably just don't know what its use case is, so it probably has a wonderful.
I mean, I didn't want to say it. So I mean, it's the sign of the times, though. I mean, when you got stuff like that.
It's Zapcat. It's going to $1. That's what I heard. I'm all in Zapcat. You're in Fartcoin. I'm in. Oh wait, no. Neither of us are in those. Those are not recommendations.
No,
I just want to be clear.
No, I have none of that stuff. One day they'll learn a lesson, but for right now, they're probably driving Ferraris. For all I know, they're probably not working.
Right.
They might be retired. They might never learn their lesson.
We're sitting here grinding every day, and they're selling Fartcoin.
I know. It's a lot of people are looking in the mirror.
Yeah.
It's tough. Would you want to go weld something right now if you can just buy a fart coin and make more than you make in a month in one day?
Yeah, that's pretty nuts.
Yeah, that's when you know you're in a bubble, when we're talking about stuff like this.
Right.
Yeah.
You, I mean, from the stock market side, though, holy cow, it's been strong up until the last couple of days. And,
Breaking records. This whole year, I think, has just been shattering records.
Yeah. Well, especially since the election.
Yeah. Yeah, it's just really accelerated. It's nearly doubled with Biden in there. I meant since Biden's been in there. And it's accelerated lately. And it's just, running hot, I'd say. But when there will be a correction, I'm sure things are going to change. I don't think that everything can go up every day. But that's kind of the way it's been for a while. Except for soybean oil, the one I bought today. It's the only one that's not going out.
Except that in the Facebook marketplace.
Oh,
that has cooled off.
Yeah, I'm having trouble selling anything, really. Yeah. It's cooled off a lot. No tire kickers even, no lowballers. They're just not buying.
Probably.
Sign of the times.
Sign of the times.
Putting their money in Fartcoin.
Maxed out their credit cards on Fartcoin.
Yeah, we promised not to talk about that anymore, but I mean, it has to be brought up. It's a real thing. This is not, we didn't make this up. I'm going to go look it up.
No. I mean, and I'll say I have heard the same argument on Bitcoin that you were just talking about on cattle, like, this is just getting going.
Yeah.
We broke through this level. We're just getting going.
And that's why these markets are really difficult, because before you could say, hey, reality is going to be somewhat a part of this equation, even though it can be irrational a lot longer than you can stay solvent. But still, you expect some. But there's so much money floating around in such weird ways right now that anything's honestly possible in any of these markets. For at least a short time, but commodities will always revert to the mean and get back to where cash and reality is. But in the short term, there seems to be a lot of weird flows of money. They love some commodities, they hate others. I mean, you got markets like coffee that are actually bullish, and hogs, But then
soy oil really is pretty bullish.
Actually, it is a bullish market, but they just have zero interest in that. Or they're tying it more to politics probably and trading that, saying that biodiesel is going to be scrapped, which isn't going to be true. But yeah, so that's what's making these markets really difficult to know where this money's going to land. I wish I knew the next hot coin. I'd go out and buy it, but I think they mint 1 million of them a day now.
I was just going to say, I think the next hot coin is the one you mint yourself, because those seem to be the people making money on them. Yeah,
so that's what's made the markets really hard, is just this weird energy, almost this fever at the top of like a multi-year bull market in a lot of these markets, not all of them, but so I have a feeling things might be different in 2025, but that's just a hunch.
Yeah.
I've thought that for the last 3 years.
We don't know where the market's going, but we have some ideas. I don't have anything else today.
No,
I'd love to come up with something else, but
no, I'm out of everything.
I might have to drag you out on the ice and we'll go catch some fish. It's thick now.
Yeah, I'm gonna have to embrace winter. It's here.
It's it's beautiful today. It's supposed to be 1 degree for the high on Saturday, so
yeah,
that's probably the day I'll actually get out to fish.
Planes, trains, and automobiles in the back of that truck. They were in their jackets. What do you think the temperature is out here? And they're shivering. He's 1. That's a good movie. I watched that with my son here not too long ago. He really liked that.
I actually have that on DVD. I might have to see if I know where my DVD player is. I'm sure it's streaming somewhere.
Well, yeah, go watch that one. That's a good Christmas movie.
That is. That one and Die Hard, top 2.
Yeah, my kids haven't watched that. I was trying to talk them into it because they saw that new Netflix one, whatever one that was. It was supposed to be the new Die Hard, but he was a TSA agent, and it was anyway. It's no Die Hard. I'll assure you of that.
Yeah, it's hard to beat the original.
Such a Netflix movie. Every single one of those movies. Not that they're all bad, but I forget every single one of them 2 weeks after I watch them.
Yeah. Yeah, you're scrolling through.
I don't know
and
how
you're
they do
like,
it. I don't know. I forget every
I
single
feel
one.
like
of
I
them.
watched that one and I don't remember until you start playing it.
Until you
and you're
start
like,
watching it
oh,
again.
Man,
Yeah.
I watched
Done
that. No
that
wonder I forgot.
Yeah, that's
Sorry,
happened many
Netflix.
times.
All right. Well, if you have nothing else to add, maybe you should just add your phone number.
Sure. Give me a call, 218-731-1578.
Thanks, John.
Yep.
Okay. So you want to put lunch on 460?
460. That's a good compromise. Yes.
Okay, so if it closes before the end of the, let's say Christmas, are you willing to go Christmas? I mean,
Yeah,
I know
Christmas
I'm
is
going
fine.
the other way.
Yep. Christmas is fine.
But, okay. So by close the 23rd, by close on the 23rd over 460, any close over 460 before the end of the year, I'm buying you lunch.
That's
If
correct.
it doesn't, you're buying me lunch.
I think my restaurant's the Fabled Farmer. How about yours?
Stella's.
Ooh, fancy.
It would be Union if they had lunch, but I just want their pizza.
Oh, I missed that. Yeah, that's Union would be good.
So we're doing dinner and Union. A beer at Outstate too. Let's throw
Yeah,
a
we
beer
can do
in,
that.
too.
Or a beer at Outstate.
Whatever.